The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday at 11 o'clock till noon at 877-927-6648. Wow, we finished May with some beautiful monthly candles. There's just no question about it. And there are a couple of things going on that are amazingly fortuitous, because we needed to have that monthly candle in the Dow, the S&P, the IWM. New York Stock Exchange is lagging, but we needed certain characteristics, the QQQ series, to be right there in their close on the Tuesday, end of the month of May, monthly candles in all of these indices. And because we closed so well, the webinar that I'm going to give tomorrow night, Thursday night, let me see if I can find it right here. Thursday night, right here, front page of TFNN, the opening call, subscriber event only, the consequences of a new market high. The implication there is that I believe we will make a new high, but more importantly is, what will a new all-time high above 18,351 in the Dow imply? And what are the consequences of the strength, the power that's needed to get to that particular level? And what will be the inevitable result when you get the potential for double tops, people becoming very, very short, etc. Now, what's really important about this whole thing is that within the context, I'm going to be talking about interest. Let me show you right here. I think I can do it, learn more. If you go to the front page of TFNN, you'll be able to sign up. It's free to subscribers, but you can gain access to that particular webinar, and it's archived for 30 days. There is just so much information. Believe me, even I'm going to have to go over the archive, because normally I never look back. I always look forward. But in this case, I need to keep following up on the information. And what is important about this, especially since the candle of May is finished, we can now talk about what market signs will we be looking for that would signal a new high is coming. That's this very moment now, in this first week of June. The implications of international competition for lower interest rates. That's deflation now, maybe inflation later. Is that what we're talking about? Important updates to this current period of excessivity. Believe me, over the last, it's accelerating. It's becoming, in its own way, a fad that is going into, I must not forget to do that. I need to show the sequence of events, how things are recognized. They first happen, then they get recognized, and then they start to become very popular and accelerate in, they're pervasive, they're ubiquitous, you see them everywhere, and that leads to a final top. And that's the essence of what I'll be talking about. Not just the stock market, about things, about everything, whether it's tattoos or whatever it is I'll be talking about tomorrow, that I think is absolutely pertinent, and how we can even measure these things. And the measure always is the stock market. I can't imagine yet, I'm trying to find it, when there's been a major high without, at least over the period that I'm looking at, for there to be reports of record-breaking skyscrapers. And that's going to be really important. So in other words, I'm looking at the socioeconomic, political, artistic excessivity, just everywhere. Try to find me a state, whatever town you're in, you tell me if you're not doing a major project. I mean, the government of your town, the city, is not doing something costing more than it's ever done before, probably 3 times more than it's ever done before. Almost every city is doing it. Okay, so we're out of that, we're gone, goodbye. And what we're looking at now is the Dow. I'm sorry, we're looking at the E-mini. Down $1.50 after being down 12 points earlier on. We added to our buys this morning. We're looking at, the way I'm looking at this, I think that there's a real good chance that we're going to be going higher in this particular period. And I'll talk about the chart pattern. Let's just run the numbers. Here we go. The Dow is down 29 at 17,757. The S&P is down 1. It was way better than the Dow yesterday. It's even better today. It's down only 0.82 at 2,096. The comp index is up 4 at 4,952. The VIX index spiked higher, now it's up 35 cents at 1454. Gives it plenty of room to come down over the period of the day. We'll see what happens. Now, the short-term trading index is spiking. It's up at 2.07. It's above the level that I always look at. And that suggests that regardless of where we close today, there will be a little minor dip early in the morning again, like there was today. There will be again tomorrow before there can be a rally that unfolds. Now let's go on. We're going to look at gold. Gold at this particular point is down 5 at 12.12. The silver is up 2 cents at 16.01. Platinum is down 9 at 9.69. High-grade copper is down 2.50 at 2.07. Oh, this is so interesting. Crude oil is at 48.44, down 66 cents. Bonds are up 30 seconds at 165.5. And we've got the dollar down 43 cents at 95.45. Now, let's just run a couple of things here. Remember the chart that we looked at? Yesterday, looked at, well, this is the 120-minute chart, shoulder, hit shoulder. It went down, tested the neckline, broke it for a fraction of a moment, went to 17,331. The neckline was at 17,399. It's called 17,400. And turned around and went peak A, B, C, D. What do you expect in the Chapman Wave methodology? You want to go to at least a D. Other things can happen at that point. We actually went to an E at 17,891, a 660-point rally, a very, very strong rally. And now we've come back to today's low of 17,664. What do I do for my subscribers? This is what I do. I always talk about, first of all, let me show you the charts just so that you know, because if you're going to get my subscription, what you'll be getting is every single day from about 6:30, sometimes 7, sometimes 6 o'clock, I start sending out the very first chart, which is always the Dow chart. And what I'd shown in this Dow chart with this 20-period exponential moving average, the red thick line, is that from the high that was made a year ago, May of the 19th of 2015, at 18,351, we had gone into a down channel, made a final lunge to the upside at a B minus. In other words, it failed on a second peak, plummeted below the left side trough C. And what did it do? It went to a D, an E, an F, and then it tried rally again and then plunged to the August 24th low. So this bounce above the down channel line was really important. And that 20-period exponential moving average was even more important. It became resistance all the way along. All of a sudden, you bounce on November the 3rd from the low of August to 17,977, create the same channel, bounce to B minus, fail. Now we've just hit the C. Does that mean we're going to go to a D because there's something different happening here? I think so. I'll be back. Basil Chapman, Tiger Technicians Hour. Dow's down 21, S&P's down 66.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC. FDIC, and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. So the low that was made in the E-minis is now down only 50 cents. Was at 83.25 right there in the 10-minute chart. We're in leg B. There's the left side, right side price time match, which says that by 1:30. Wow, as long as that. No, that can't be right. 1:30? All right, 1:30. I don't think that I did that correctly. It should be right there. Okay, I got it. Okay, it says that by 12:40, we should be testing the 2095, 2096 highs of 2:30 this morning. A close above that will be extremely positive and force buying to come in. A pullback from here, back from 2093.75 under 2091, we'll say 2087 is really important to hold. Okay, let's get out of that. Now we're going on with this, and I'm looking at, so the E-mini made a trough E in the 120-minute chart. The weekly chart just looks absolutely fabulous. MACD is good. Stochastics at 84%, a little lower than it was just 3 weeks ago, but still very good 4 weeks ago. And the daily chart says that this pullback is probably going to make a peak B today, but at 93%, the stochastic is very strong and the MACD is very good. So far, that's what we're looking at. Now, I wanted to do two things. I wanted to look at the dollar. Look at the dollar pulling back here to make a peak E. But it's holding the 9-period exponential moving average of 95.42. It's at 95.55. This is the same pattern. Look, 86% on the stochastic. MACD is very strong. This is suggesting that the 200-period exponential moving average of 95.88 is very strong. It's like a magnet. And as long as it holds as a magnet, we shouldn't plunge much more. But if there is a close below 95 by tomorrow, at that point, you will absolutely see gold start to rally a little bit. And gold right now has given back almost all the gains that it made early on. I think 1197 is the 200-period exponential moving average. I see no reason to continue saying that gold is having a very well-deserved break. Dollar's moving higher at this particular point. I think that's going to help the market at this stage. So I think we've covered a chunk of things that I wanted to do. All I can say is that at this point, I actually have to get rid of stuff for my webinar because it's just going to be too much. but I want to make it as thorough as possible. It's going to be an hour and a half, 6 o'clock to 7:30. There will be, over the last week, we've already started getting our positions. So I'm adding to the positions. I might even double up on some of the positions. So this is just a fantastic time if you're looking out. We have just one short position left. We shorted it just under 106. It's trading at 99 right now. And that's so far doing nicely. But mostly we're looking at the upside. And the question again, could I look at the Euro, EUR, USD currency pair? Nice bounce off the low. It's going to do something like gold. It's going to try to rally a little bit more. But if the dollar just even springs back a little bit from the from the 95.50 area, if it's able by tomorrow to try to bounce towards 95.63-ish, it'll impact the euro. It'll impact gold again negatively. So this is going to be a very important period for these for the currency pairs. But the weekly chart suggests that the euro-dollar currency pair is in fact making it's making a pullback after a peak. 1.123 is the resistance. My thinking here is that it's going to go towards 1.100. And if you look at the monthly chart, let me just draw this a little bit neater. I hate to see these things imbalanced. You will see that the euro-dollar currency pair is making that H pattern, lowercase h pattern that goes to a lowercase m pattern in the monthly chart. And until it breaks into the 1.20s, this pattern could go on for a long time. All right. So now I need to do a couple of things here. I was asked to go to the FTSE. Well, I don't have the FTSE, but what I do have is the UK. I think it's DOW, or was it Great Britain? UK, yep, it's Great Britain. Dollar GB, DOW, and that simulates the action very, very well. The chart looks very similar. And what we're looking at, I could even get my other, but I can't. Peak A, let me just double check on this. The low was made at 272.10, 272.06, so that's lower, and 272.06 double bottom. So that's ABC. We made a peak C. It's down 0.69%. That's the, I wouldn't say the FTSE 30, but this mimics the FTSE 30. But most importantly, what I'm looking at is that the trading range looks almost like the TLT. If you don't mind, just keep looking. The left side is the daily. The middle is the weekly. On the right, you've got the monthly. This is the Great Dow Jones United Kingdom Stock Index. Now, I'm going to go to the TLT. Keep looking, keep looking. You'll see that the TLT has a similar digestive formation since it made that peak G top at about 133, pulls back to 127, bounces to 132.32 on May the 13th, and has now come back, and it's in a range. And that range is continuing, and the same thing in the weekly chart. The ranges continue. Monthly chart, the ranges continue. So if you look at the EUR USD, once again, here we go. Whoops. It's the exact opposite, but it's still looking like it's, no, I wasn't looking at that. I'm sorry. I was looking at that Great Britain, Great GB DOW. That's what I was looking at. You'll see that it's also range bound in content. And until it breaks into the 284 level, let me just give you the date. Until the FTSE 30 can break above the high of the 29th of April, it's stuck in this range. I think it's going to, but this is the moment at the moment. And if it breaks down below the low that was made on the 19th of May, that's a problem, both in the daily and the weekly chart, and of course in the monthly. I get a feeling it's going to try to rally a little bit, but of course it's got this whole thing coming out, the yes/no vote. That's something else. Now, what I'm going to be doing, let me go back to my charts that I was talking about. So first of all goes my Dow chart. It could include the 120-minute chart at that point, but usually it's first is the Dow chart. Then comes the overview and market today. The overview just gives you the bigger picture, and it also tells you what to look for, and it gives you these 5 quadrants. I'd have to call them 5 quadrants, with the Dow in the left side top, 120-minute chart, the 120-minute chart, VIX in the left-hand corner, the Richard Arms Trin Index, Volatility Index, right? Trin Index, short-term trading index in this top little rectangle right here. Then comes the daily Dow with just a bar chart and the daily S&P. Okay, 5, and it gives you an incredible amount of information. And I'll tell you what we're looking for, and this is exactly what we're looking for. A narrow mixed close would be really positive, while a sharp, broad down close has other connotations. For now, there should be support if the VIX Volatility Index does not hold in the 15s at mid-session, watching dollar, gold, and bonds. And then it gives you all the little things that we're looking for here. And if you look at the VIX Index, it's at 14.54. And then I give you all the different, what we're looking at, why we're looking at it. This is CTAS, we don't have it, but it's like a bellwether for us. It's Cintas Corporation, overalls, etc. And then these are all these little pictures that you can see down here. Those are the pictures that I'll be showing in the charts tomorrow night. And some of them are just so timely, they just came about today. Perfect time. I'll be right back. Basil Chapman, Tiger Technicians Hour. The Dow is down 27, S&P is down $1.50.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. Basil Chapman, Dow's down 32, S&P's down 2 3/4. Okay, so this is what I want you to look at here. Within the context of the market itself, what does this all mean? Look, INDU. So the Dow's down 34. This weekly chart with the W formation, this is what we'll talk about tomorrow night. I'd actually like to see where we close today, because the first day, I don't know how to explain this. Whenever there's a weekly close, and on the Thursday going into the Friday, there's been a recovery high, and then that Thursday sees a down close and Friday is a down close, It sets up the following week with a potential weekly peak. When you do that in the monthly, in other words, in the last session or 2 sessions before the end of the month, there's a sudden reversal. It means that if you pull back quite sharply, as we have here, look, this is the Dow weekly chart. See, we're quite a bit away from this 18,167 level, 400 points. If you look at the Dow monthly, peak be at 18,167, a lower high bar and a lower low bar, but we held the 9-period moving average. So that makes the start of the new month, being June, very important. What I like to see, if there are going to be higher highs that month, I like to see that by the 2nd or the 3rd of the month, not only are we tackling the previous high bar, that is the month before, but we are starting to close above it. I don't think that that's possible right now, because we're talking about 400, 410, 420 points up. But what's most important, 400, is that 500? Yeah, about 410. What's really important about this is that the doji candle with a long-legged doji, it's not really a perfect doji. I like to call them dojis only because you open and close at the same price. But if you look at the wick, let me open this up a little bit wider. If you look at the wick of last month, going to the 17,934 high and the 17,331 low, if we were to trade, it almost has the same impact and affect as a Chapman wave Roman candle. And that would say to me that if we were starting to trade in the 17,550s, not far away from here, 200 points down instead of 200 points up, I have to consider that there's going to be another test of the 9-period exponential moving average of 17,470 in the monthly. However, the weekly chart now, let's just move this away and let's look at this weekly chart in greater detail. If we look at this weekly chart, what we're looking at is, besides this huge W formation, which has now used up time to the right rather than price, what it's saying is that the 9-period exponential moving average, since the Dow broke above it, that black line, back in the week of the 26th of February, has been fantastic support. It hasn't even what I call walked the 9-period moving average, it literally sprinted. Then it came back down, and then all of a sudden, the week of the 6th of May, it tested the 9 EMA. That was the low. The very next month, not only did it, next week it tested, the week of the 13th of May, it broke and closed below it. And then it was really critical the week of the 20th, because the price had this basically like a doji candle, almost open and closed at the same level, but it had long legs to the upside and the downside. What it was saying is that a close above the 9-period moving average the following week would be absolutely imperative. Not only that, it needed to close above the high, which it did, the high of 17,755.80 the week of the 20th of May. And what that sets up, it starts to say that that 9-period exponential moving average is back in as a really important focal point and support level. And where is it now? 17,652 on the 9-period exponential moving average. So this little rebound that we've had is just, for me, although we went long, it's still part and parcel of this declining process. I want to go back to that in a moment. But most importantly, what we're looking at is it's still early in the day, early in the week, early in the month, first 2 hours of the month, of a new month, to even discuss the monthly candle. So we need to focus in on the weekly candle right now. And that weekly candle is saying that it's going to be imperative that on any day, today's Wednesday, so we've got Thursday and we've got Friday. If on Friday, instead of closing in the 17,400s or higher, 17,740s or higher, we close in the 17,620s or lower, that's suggesting not only have we used up time in this W formation, which is a negative, but we're also going to be looking at strong resistance on the upside. And we have to prepare ourselves for the downside testing. I'm just making it as simple as possible, right? And the VIX index will be up in the high 15s if that's the case. Now, questions abound. So in other words, The Great Britain Dow chart that we looked at, that is the Dow Jones interpretation of that index, says that it looks like it wants to try to go a little higher. All right. Next question I had is it possible? Well, the question was, can the FTSE break down and go to the lows? Yeah, of course it can, but I'm thinking there's just enough strength here to try to keep it up. It might be that the FTSE is independent of the other markets because it's got another factor. It's got an economic factor based on the yes or no vote. Okay, now the FXI, I need to just do that for now. The FXI has a nice rebound. It's pulled back today. It's at the higher end of its trading range, just down 26. It's at 33.39. This is going to be another clue to what we're looking at in the greater markets, because if the FXI, the China iShares large cap ETF, is able to spike by Monday, the maximum, not later than Monday, into the high 34s to try to test the 34.99 200 period exponential moving average, that's going to be really important because it'll be the first time it's gotten there in a long time. And if it breaks under 32.50 and under the 9-period moving average, it's going to say, uh-oh, watch out, because at this point, China being strong would be a help. But this particular pattern of the Chapman wave squash suggests that it should go to at least a leg C before it takes a little time out and then makes a D. Next question I had was, if I can just get there. Okay, I won't go and see the comp index. You know, I'll look at the comp index. I talk about the comp index in my market call. Oh, don't tell me I've lost it again. Didn't I just do it the other day? A peak B, a peak A, and now it's sort of struggling to make that peak C in the weekly chart, but the daily chart is quite strong. Oh, this is a Chapman wave squash. I have to consider that the comp index is going to go higher. It's down 8 at 49.39. If the comp index is able to take out today's high of 49.53.17, it'll immediately want to tackle the 49.69 area that was made back in April. So it's looking good. A break under 48.70 would be a big negative. Next thing I want to look at was Goldman Sachs. A lot of emails about Goldman Sachs. You know, I just think Goldman Sachs is part of the XLF now. It's not basically one of the great leaders. It could turn into that. It's not that now. It's down 28 cents at 159.16. Look, it almost looks like that Great Britain chart. It looks like the TLT chart. It's just stuck in the range until at 159, until it can close above 162.50. Boy, if Goldman Sachs closes above 160.63.50, touching even 164.01, that's going to be really important. Right now, it's just kind of in a trading range. I'll be back. Basil Chapman, Tiger Technicians Hour, and we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
I'm not sure I got the right question about the USD. The USD CHF. This is the US dollar Swiss franc. You know, it looks a lot like the dollar chart. I haven't looked at it for years. I don't trade the currencies. But in fact, it's got a very nice pattern and is holding very well. And all I can say is, if that's what we're talking about, it's made a peak A, a peak B, a peak C, a peak D, and now it's just resting a little bit. And the weekly chart is still positive, but it does have at 0.988, down 0.004. I hate all these numbers. Come on, give me a break. 0.00496. That's why I gave up when I was doing that years ago. I just couldn't, for the Chapman wave, I need a penny. So I'm busy counting. 984, was that 984? 984? It was just too complicated. It's holding very well. That's all I can say. So if you're long, personally, I would, because there could be a little choppiness over 2 days, today into tomorrow for the dollar, and the gold is not trying to rally much at all. It's just kind of stuck. So I think you're on the right side. I'm just going to say to you, the 0.984 is really the support that it needs to hold, because if it takes that out, 0.978 will be the next one. But if it goes to 978, that's too deep. I don't like that. That's actually under the 9-period moving average. If I was long, I don't want to see anything more than a little lower than today's low would be fine. But by tomorrow, it must be going sideways. And it could even produce a Chapman wave stalk leg formation, which would be very bullish. And that would say it can go sideways with slightly lower highs and slightly higher lows, making the oval pattern. And then suddenly it will break above 0.99552 for that leg that goes to an E. Hope that helps you. We'll see. So another question I had was, I couldn't quite understand that out of a lost GO Bloomberg function on terminal to see jobs. Oh, all right. So I just wanted to say that the XLF holding really well. We are long. We had another position which was taken out this morning for a very tiny loss. But we're in at a very nice level below 23. So I'm looking at this, and this has almost the same pattern. So if it's going to work, the XLF needs, instead of taking out 23 support, it needs to go to 2390 to 2420. And I'd have to say by early next week without breaking down. That's going to be very important. Yes, the weekly chart says it's time for a little bit of a break. My eye says, no, there's no time for a break, because this is a period where the financials should be building on strength, thinking that there will be a little bit of a hint about an interest rate bump, but it'll only be a 1/4 point, but it should help them. Next question was, the next question, and I'm going to see if I can do this, was the IYT. Yeah, the IYT is the Transportation iShares 139.09 down 83 cents. This is a peak B. It's also holding very nicely. The stochastic's not at 80%. It's just a tad under at 79.33. The MACD is good. I got some suggestions that say that the 138.60 level of the 9-period moving average, it could bounce around there just a little bit. But most importantly, the weekly chart needs to break out. And I'm going to raise this particular line. Remember, trend lines are your friend. Your friend. Trend lines are your friend. And what you want to do is to use them as best as possible. I'm very judicious in my use of them. I like to put them into levels that I think are very important for that moment. But most importantly, what I'm looking at here is that I'm going to be very pragmatic about this. And I'm going to say that there's a pattern in the, there you are, in the transportation index that says that unless the transportation iShares at 139 start to move, I would have to say I can give it a few days if it's only hanging out here, not trying to make a U-shaped pattern by breaking under 137.60. But if it holds nicely here, I want to see that it starts to move to the 142 areas, 3 points high. That's a lot of points, but it needs to do that because once it does that, you're looking at a really positive a bit of action in the shorter term trend line right there. Right there in the weekly chart. Okay, so those are the parameters. And the other thing I want you to do is I want you to do a question in the den. I want you to look at the VIX index. I'll be talking about all of these things tomorrow night. Just it's so important to go through everything very thoroughly. Now, we've had big spikes in the daily chart to a peak A and then it failed, then a peak B and then a peak C. And that peak C decline is the biggest we've had. It was the other day, the 19th of May. It was at 1765. Just 3 days ago, it was at $13.04. Now it's at 14.70. My suspicion here is that the VIX index is building up some kind of support level, but that it isn't ready yet to break to the upside. And that's what we're going to be monitoring real closely. I mean, the day's young. Anything can happen still today. It's not a big deal that we've turned around and found some buying because it's the beginning of the month. So I just wanted to say that the VIX index, I'll just make it real clear. Tomorrow I will give you the parameters that we're looking for. What should happen if certain levels are reached, either upside or downside, just on the near-term basis. If the VIX index by the end of the day is getting close to 14.95, 15.05, that area, the 15 area, you'll see this market give back a chunk of the gains. But at this particular point, I think there is some buying pressure. I haven't spoken about the USO, and the USO made a peak D the other day. Remember, that was that fourth highest peak. It went to 1212. Now, I think it's just consolidating, but the way the weekly is acting, the weekly chart is still really positive. I was asked whether or not I would be short. I would not be short crude oil. I'd rather be looking at wanting to buy the long side, even if it's just in the trading range. We have no position in the crude oil right now. And I'm going to look at the continuous contract that made a peak F. Peak F is where you've got to be a little careful because if the technicals start to fail after that sixth highest peak, you can actually see a very sharp decline. But if the MACD only makes a nominal wedge, that is the distance between the 9-period differential, the green line, and the red line, that says it could be just a nominal sideways move for crude oil. But if the stochastic at 84% right now, well, to get to 79, you would have to see crude oil break under 46.20. That's what I'm thinking. Right now, crude oil is holding pretty well. Okay, I've got a couple of things. There's another question that just came in. Let me just give me a second. Okay. Yes, the webinar will be archived. Not only will it be archived, it'll be archived for 30 days. And TFNN is fantastic. Usually I do by the next morning, it's already on your archive page, on your page. So that's going to be important. A couple of quick questions I had here. RB. Oh, let's look at that RB. If you don't mind, I'm still going to stick with the June. I just don't remember what the contract was. RB trading. Yep, it's the same thing. You know, it's the same as the crude oil. It's trying to pull back. It's just going sideways. I got a feeling this is a new 8B. Oh, could be C. Yes. How about 50, 55? No, it's not. This is an A and a B. Could be a turnaround. Look, I'll make it real clear. The New York Harbor blend stock crude oil is trading at 1.614. It starts to break down when it breaks under 1.56 to the 1.55 area. But what's really important about this is that if crude oil, this NYM contract, is able to push into the 1.65 area, that'll say, hey, it's going to try to test the highs. That's going to be important. I've got a couple more questions. NBR, Eiffel Tower. Let's have a look at NBR. I'll do some work during the break. We'll see. Okay, I'll be back. We'll talk about neighbors. The Dow's now only down 34, S&P's down 3. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. We're back. Basil Chapman, Tiger Technicians Hour. So this is what I'm looking at here. NBR, which is Neighbors Industries, Inc., in the oil service area. This is acting very well, actually. I don't know about, the question was NBR Eiffel Tower. Well, you know, it's done it already, and now it's rebounding. So it's acting very well, considering it did go to a lower low. Actually, no, that capital A, uppercase A that went to a peak F, that pattern. No, I think it's done. I think it's actually at $8.97, down 42 cents. I think it bears watching. I think that it might be a nice nibble. I wouldn't get too carried away. But yeah, maybe even here at 8.98, you could nibble. You could put, if you only have a small position, you could have an $8.50 stop. What is that? I think that's reasonable. And then what I would do, if it does rally, I would raise the stop in that position rather than adding. But if it gets to $9.25, and the market is actually quite steady and it goes with the market to the upside or with the market to the downside, I'd be careful on the downside. I'd be getting out of my position. But if it was moving higher, I would say that I'd add a second position because you're in a nice position. You got a little bit of a cushion, and then I'd add another small position. The moment it takes out 955, goes to the 960 area, that's good action. That starts to improve the weekly chart. Yeah, so that's what I'd be saying right there. And don't get carried away. This is a market where you got to pick your spots, and I just think you want to be saving capital as much as possible. But there is so much bearishness that I think there's good support to the downside. That's the reason why I'm looking at this more positively over this week rather than I had the week before last. Okay, now there are a couple of things. We're about to go to the final break before you go for your swimming lesson. It's Wednesday today. Great shows coming up. Listen to everyone. But most importantly, I think if you're interested, I'm going to show this once again. This is the consequence of a new market high. The implication is that we will make a new high, and I believe we will this summer. Could be sooner rather than later. But most importantly, what I'm looking at here is all the aspects that we'll be looking for. I had a great question. I can't answer it right now, Chris. All about, I know you're adding to longs and that you feel new highs are in the cards. Is it possible if we just go to the new high, then that's it? No, I think that we're in the stage now that says to me, we will not make a major, I'm talking about a major top until the public gets into this market. I just don't see this 6.25 years of a major bull market and the most hated bull market in the history of mankind. I just don't see it. I'm sorry. I think that we will be going higher. That doesn't mean to say you couldn't see a 2,000-point decline at some stage, but I just think that there are enough signs here that say, oh, Ford and General Motors. General Motors comes out horrible earnings, 12.97 down. Ford is down at 52 cents at 12.98, and General Motors is down huge, down $1.23 at 30.05. And I keep saying, what's going on? Well, the earnings were lousy. So I don't know. Let's just have a look at Fiat, because I'm seeing that whole Fiat crowd all over the so Jeep and Fiat, so just everywhere. All right, it's down 21 cents, also down 2.93. Oh, man, this is just a fascinating market. The retail index, which we were stopped out of, is acting extremely well. We took a tiny loss. We were in short a half position at 75.51. We got stopped out for, I put it down, I think. I forgot to type it in. But we did get stopped out for a very tiny loss, RTH. Just over a 1%, 1.4% loss. It's fine. I'd rather know that this is the situation. I'd rather see retail acting well. And so far it is acting well. Isn't that something? So we're about to wrap up. Have a great trading day, and I will see you tomorrow morning. But don't forget, go to the front page of TFNN and check out my webinar coming up. There'll be positions that we'll be looking at. There'll be, I'm really looking forward to it. I waited a long time for this particular one. Be back tomorrow. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.